So you want to get a car, but you don't know if your credit score is good enough. Well, then this video is for you. Your credit score is no joke, and it can make or break your chances of getting approved for most loans. And it can also affect the interest rates you'll pay. Now, lucky for you, I'm here to spill the beans on the minimum credit score you need for a car loan. And I've also got some bonus tips to help improve your credit score if it's not in that healthy range. Now, ready to hit the road? Well, stay tuned. Welcome back to the channel. I'm Andy from Credit Sage, your best bet for hitting those credit goals. Now, with over 3,000 reviews for a 4.9 out of 5 Trustpilot rating, we hardly need to toot our own horn. Now, today, as always, I've got some valuable info that'll have you cruising in your dream car in no time. You cannot afford to miss this one, so let's get straight to it. What is a credit score? So a credit score is a 3-digit number that represents your credit worthiness. It's based on your credit history, and this includes your payment history, your credit utilization, length of credit history, types of credit, and new credit inquiries. Now, the higher your credit score, the more creditworthy you appear to lenders. Speaking of lenders, these folks use your credit score to determine whether to approve your loan application and at what interest rate. A high credit score can make it easier to get approved and score a lower interest rate. But if your score is on the lower side, lenders might be hesitant to approve your loan or may charge you a higher interest rate to offset the risk. Now, if you have a high credit score, say 750 or above, the lender is likely to view you as a low-risk borrower. Now, this means that you have a strong track record of making on-time payments, keeping your credit utilization low, and managing your credit responsibly. Now, as a result, the lender may approve your application with a relatively low interest rate, say around 3%. Now, on the other hand, if you have a low credit score, say below 600, the lender may view you as a high-risk borrower. Now, this is the exact opposite. There's a possibility of missed payments in the past for you, a high credit utilization rate, or a limited credit history. Now, in this case, the lender may either deny your loan altogether or approve it with a much higher interest rate, say 10%. So generally, it's a good idea to keep your credit score in mind when you're applying for a loan. Now, some loan types, like housing loans, will call for a minimum credit score. But with car loans, there really isn't a minimum credit score. That means a low score or poor credit history won't necessarily keep you from getting financing. So let's look at how your loan and credit score mix. There is not necessarily an established minimum, but your credit score is usually a reflection of your credit habits. And that does matter to lenders. So some lenders do impose a minimum credit score requirement, while others opt not to. If your score does not meet the requirement, you probably will not be approved. It's good to shop around a bit and find a lender that's a good match for you. Now, the other major way in which your credit score affects car loans is in the rates you're offered. It's the same as other loans in this regard. A better score equals better terms. A borrower's credit score can directly impact the interest rate offered on a car loan. A higher credit score typically means a lower interest rate, while a lower credit score may result in a higher interest rate. Make sense? Now, this can affect the overall cost of the loan, as a higher interest rate means the borrower will pay more in interest charges over the life of the loan. I'll give you an example. A borrower with a credit score of, say, 700 might be offered an interest rate of 3.5% on a 60-month car loan. A borrower with a credit score of only 500 could be offered an interest rate up to 15% on a 60-month car loan, which would translate to a much higher monthly payment with a borrower than a score of 700. This means that the borrower with the higher credit score would pay significantly less interest over the life of the loan, resulting in a lower overall cost of the vehicle. Keep in mind several other factors also influence your loan rates. Now, these include loan-to-value ratio, your debt-to-income ratio, loan term, discounts, and vehicle details. A lower LTV ratio and DTI ratio typically result in lower rates, while longer loan terms usually come with higher interest rates. Some lenders offer rate discounts for setting up automatic monthly payments or using their car buying services, so that's something to keep in mind. And the vehicle's age, mileage, and condition also play a role, as lenders may have restrictions on financing older or higher mileage vehicles, or those with a salvage or rebuilt title. All these factor in to your overall payment of the loan. Overall, however, a higher credit score opens up access to better rates. So it's important to work on improving your credit score if you're planning to take out a car loan soon. Now, here's how you can do that. The first option is to reach out to us here at CreditSage. Our team of professionals has all the skill and expertise to ensure that your credit is in good standing. We know just what to look for when it comes to identifying potential issues and areas for improvement. You can save yourself the time and hassle. Just give us a call using the number in the description below and let us handle everything. Now, on the other hand, if you want to get to work on getting better credit, here's some stuff you can do on your own. Pay your bills on time. Payment history is the most significant factor in determining your credit score. Make sure you pay all your bills on time, including credit cards, loans, and utilities. Late payments can have a significant negative impact on your credit score, and the longer the delay, the more damage it can cause. Payment history makes up 35% of your credit score, so paying on time is crucial. Keeping your credit balances low. Your credit utilization rate is the ratio of your credit card balances to your credit limit. Keeping this rate below 30% can help you improve your credit score tremendously. For example, if your credit limit is $10,000, you should try to keep your balance below $3,000. High credit card balances can make you appear risky to lenders, and they may assume that you're overextended and unable to pay back additional credit. So if that's you, try to pay down your credit card balances as much as possible to lower your credit utilization rate. Limiting new credit applications. Did you know every time you apply for credit, it can temporarily lower your credit score? This is because applying for a new credit generates a hard inquiry, which is a record of someone checking your credit report. A hard inquiry can lower your score by a few points, and several inquiries can add up and cause significant damage to your score. So try to limit new applications, especially if you're planning to apply for a car loan soon. If you want to learn more about hard inquiries and how to remove them from your credit report, you can check out our video linked up here. Check your credit reports for errors. You're entitled to a free credit report every year from each of the 3 major credit reporting agencies. So you want to review your reports pretty frequently for errors and dispute any inaccuracies with the credit reporting agency. You also want to keep old accounts open. The overall length of your credit history is another significant factor in determining your credit score. So keeping old accounts open, even if you don't use them, can help improve your credit score. So the longer your credit history, the better your score. So closing out old accounts can actually shorten your credit history and reduce your score. Consider a credit builder loan or secured credit card. Now, if you have poor credit or just a limited credit history, a credit builder loan or secured credit card can help you establish a positive credit history. Now, these products usually require a deposit or collateral, but can help you improve your credit score over time. Overall, remember that improving your credit score takes time. So be patient, be persistent, and little by little, by following these steps, you can improve your credit score and increase your chances of qualifying for a car loan with favorable terms. But again, if you're listening to this and you need help, remember CreditSage is always open. Don't hesitate to reach out to us for expert assistance. All it takes is a quick and easy phone consultation and you're on the road to your dream vehicle. If you found this video helpful at all, please show some support and hit that like and subscribe button, and you'll be able to see new videos right here on the channel each and every week. Thanks for watching.